Okay, let's go ahead and get into the stock market technical analysis. Monday morning, we've obviously seen there's kind of a ramp in the markets, mostly in the tech sector, and really just in just a couple names. So it's really the Mag 7 and some of these semiconductor stocks. So we'll take a look at that. I'm going to show you guys what I'm looking at really this morning. This is the NQ, the NASDAQ futures. And really what I do see here is a breakdown and a back test. We're actually back testing now. So this is the daily chart on the NASDAQ futures starting back really the entire rally that started back in October, the holiday rally. You can see here's support. There's another reaction. We didn't really get a third reaction, but we are seeing that kind of third reaction here. It was, I mean, you did close right there on the January 2nd, right at that trend line, but then ultimately just broke right after that. And then today you can see we are back testing. So, you know, I put a fair amount of confidence in this trend line, but it's definitely not the most well-established trend line. So keep that in mind. All right. The other thing is obviously I have a starter short position in QQQs. And I've added a small amount to it. The other day, last week, early last week, I'm not adding any to that position and bringing it up. I'm not even at a half size position quite yet. And I'm not looking to add, obviously, to a full size position until I see some price confirmation. All right. And so I've talked about that. Even when I said I'm going to take a starter short position, I talked about how I wasn't looking to add until I really only want to add on downside price action. Okay, confirmation that the price action is rolling over. So even though it does look objective here to add, at least in the futures at resistance, I'm really only looking to add on downside moves because there's a lot of momentum. There's kind of a mania right now in these tech stocks. I mean, it's a very crowded trade, but it doesn't mean it can't become more crowded. It's very overbought, but overbought often can become more overbought. So I'm not looking to add until we get some downside price action. And if it just keeps going up, if it wants to just keep going up, then we'll just, I'm just going to stop out of the position. We'll let this thing just continue to run. NASDAQ futures does have negative divergence here on the daily. You can see this is the RSI. And if I zoom in, RSI is starting to turn down. Not quite, but it's starting to. So a little more downside and we'll have confirmation on that divergence. It's just an extension of the divergence. And this is a very common pattern. You'll see kind of an upward move. Then you'll see a breakdown and you'll see a back test into resistance and make a new divergent high. That pattern repeats very often, and oftentimes it's very objective to take a short position on that back test and that new divergent high. So that's what it looks like to me right now. The PPO does have negative divergence, not fully confirmed, but to confirm you want to see a bearish PPO crossover, all right, something like that. If I roll out to the weekly chart, I mean, you can see we have negative divergence on the weekly. Here it is right here, all right, where momentum is less than it was previously. So that shows that this high, there's less and less momentum going into this new high. And then even if I roll out to that former high, because we're breaking out to a new high again in QQQs, the former high you can see is back here, and we have less momentum even going all the way back to there. So again, the weekly chart is by no means a chart that I trade in active positions, just because it can take a long time and you can basically get your account wiped out in between moves. So the weekly just kind of gives me the larger picture, but we take positions, manage positions by the dailies and by the hourly charts. And that's swing positions. But again, negative divergence there on the daily. Let's look at QQQs, the ETF, the tech sector ETF. I've got all kinds of lines going on. I really probably need to spend some time cleaning this up. One thing I was actually looking at, this is the weekly chart. This is going all the way back to 2009 here. And I've had this trend line. I haven't talked about it for a while, but there's your low. Here's a reaction low. There's a reaction low. There's a reaction low. And then we have a couple pierces of that. Here is a pierce, and here is a pierce, but in between that, more reactions on that trend line. This pierce here is December of 2018. If you guys go back and remember, that is when the Fed was hiking interest rates, and obviously it broke trend, and they did a 180 reversal. So they obviously saw this and reversed their position, and we went back to trend. And then this is COVID right here. So both of these pierces required Fed intervention. And then if I go out, so lots of reactions, I think, and it's valid to me that we had clean reactions on this trend line, and the two pierces, the Fed got involved. So I think that's a pretty valid trend line. And then if I roll out, you can see there's some reactions here, a little chop through there, but again, resistance and resistance. All right. So to me, it seems like we are grinding higher, making a new divergent high into major resistance on the weekly chart. All right, that's that. Doesn't mean it can't continue. It can continue to kind of grind higher. It can even recover this trend line and keep going higher. Nothing says that that trend line has to hold. It's literally just a probability that, because this trend line has been a valid trend line with lots of reactions over the last, more than 10 years, that the probability is elevated that it's going to hold true again. All right. Okay, so that's that. Let me go down to the daily on this one, QQQ's daily. Okay, on the daily, obviously they've been gapping it up in the overnight in the futures market. They're gapping it up. Pretty strong buying actually on Friday, relatively strong buying. Gapping up today. Not really anything technically changing today. So, I mean, again, it's gapping up. It's holding kind of these higher prices right now, just barely. I mean, it's pretty muted, but there's no technical sell signal. There's no... you want to see some sort of a bearish engulfing candle, a gap down, some sort of, a doji, some sort of a reversal candlestick, and then we look for confirmation. We just don't have any of that right now. So, yeah, in general, still looks like it's could go a little higher. Now, we do have divergence, but again, divergence just tells me that the conditions are there for that reversal. Doesn't tell me that the reversal has started. So I never just say I'm shorting because there's divergence. Usually I'll short if there's divergence, if we're rallying into resistance, or if we break support, okay? Or if we have some sort of a reversal candlestick. Those are the sell signals. The divergence is not. It's just a condition. And you can see here on the hourly chart of QQQs, this morning they dipped it down, filled the gap. The buyers are stepping in. So in general, I mean, the buyers are just bidding this thing up on any and every little tiny dip. To me, it looks like what do you call it? Like a blow-off top move, probably a buying climax. And usually, doesn't mean it can't go higher, but typically a buying climax will signal the end of a move. So doesn't have to be, but in general, that's what it looks like as of right now. All right, rolling through the Mag 7. Apple, you got some resistance here at this gap fill on the daily chart right there. It's about 191.78, 75. We're above it now. We'll see where we close the day, okay? If they close back at that, then to me, this just looks like kind of that stop rate price action that you'll often get around key levels. So keep an eye on that. If they close above it, then, maybe Apple has more to run. Apple could be running up to put in a new divergent high, all right? That would be up over here above this, around 200 essentially. So that is possible. As of right now, I don't see anything that tells me I want to short Apple. NVIDIA continues to really walk up this pretty steep trend line. If I go to the hourly chart, it really shows in the hourly pretty clearly, but kind of go like this, mark it out. And NVIDIA is basically just marching up that trend line. All right, so there's support, and it just continues to kind of hit it, and the buyers step in. It has negative divergence, and it's going to break soon, I would suspect, but it's a matter of, waiting for that break. And they might not give you an objective level to short this thing. I did point this out to the private member group, indicating, to be on the lookout for a sell signal, but until one actually shows up, NVIDIA continues to go higher. They might gap this thing down, though, and really not give you a clean opportunity to short. So, But in general, this thing needs to break trend in order to get some selling going. And, I think the market's probably going to start selling off when this thing breaks. Google, and we're looking here at the daily chart. It looks like we've got kind of a bearish rising wedge. Resistance. There's not a ton of reaction, so I can't quite say it, but you can see today they're kind of gapping it up and selling it down. So we'll keep an eye on this one. It is, they might want to put in a new high, guys. I mean, the high is right here. We're really close. And, some of these other charts are obviously putting in new highs. So maybe Google wants to do the same thing. So, again, not a screaming short to me on that one right now. Microsoft on the daily, putting in a new high. It's a divergent high. It's close enough. You can see equal highs here. It's pretty much equal highs there, but higher high in price. That's divergence, and especially on the PPO there. So negative divergence. If I roll down to the hourly chart, we were kind of walking up. If I extend this out, this was kind of the trend line we were going up. To me, it looks like we kind of were marching up. We broke down and we're back testing. Big rejection candle, although we'll see if there's confirmation or any continuation. That's the hourly chart, guys. So that's a bearish engulfing, but there's no real follow through. The dip buyers are there, so we really need to see some follow through to help confirm that as a candle. So again, I need price action to confirm to the downside. I'm thinking that's the way it's going to go, but obviously this thing does continue to go higher. It's not any again, these kinds of moves, especially blow off tops, get a lot of people to just throw in the towel and they just go long, and it's usually not the best. You don't want to be buying into a mania. Blow off top that just goes parabolic is not the area that you want to typically be buying. It's kind of a game of hot potato. Yeah, you can, if you buy and you're able to be perfect and get out right when you need to get out, then great, you can make some money on that momentum trade. But most people don't do that, and it's just the fact of the matter. You look at the volume. In parabolic moves, very few people make most of the money because they bought early, and most people buy at the highs. All right, and then most people, when that move ends and it reverses, they get caught on the other side and they end up with losses. So, not to say that that's going to happen, but that is how those parabolic moves work. Meta is obviously breaking out above the former highs here at 325.87. All right, it is still negative. It's still divergence. That divergence is still there, negative divergence. But we've got this trend line to watch on the daily chart. Support. So there's another reaction. There's another one. So no sell signal until you break that trend line right there. All right, a break of that trend line, you just extend it out, would be an objective time to short this thing. Until then, it's it can continue higher. And Amazon on the daily, again, making a new high. At least it's actually not a new all-time high, but it kind of this one has two trend lines I'm watching. One, you got a major trend line down here. All right, so this is where I think it's heading. All right, you've got support. I would put good odds that it is, let me kind of reset this, good odds that this thing is going to head down to that major trend line. And, that is a drop. If we're to start now, it's about 14, maybe 10. It depends on when you get there, 10% to 14%. All right. And then there's a short-term trend line here, support, and they're kind of buying it up. So once that breaks, the initial sell signal would come on a break of that. Then that should set us up for a move down. You'll probably get a reaction right there. So you probably fall, you bounce, and head down to that trend line. All right, so that's what I think that'll do. You can see negative divergence just continues to build. So it's very probable that this one's going to break soon, but it hasn't broke yet. All right, GDX. So this one, again, I talked about this trend line as being support. There you go, support. We held it here. All right, you can see we held right there. It had a bounce, but the very next day, gap down and impulsive selling. All right, so that would be a sell signal. So if you were long on this because of this trend line, I think getting out of the longs, or the sell signal essentially came on this breakdown candlestick right there. Again, support is only support until it's broken, and once broken, it becomes resistance. All right, so nobody can dictate whether a trend line is going to hold or break. We have to react. But there it is. So it broke, gap down the following day, which is confirmation. So to me, it looks like this is probably heading lower. All right, I think we'll probably fill this gap, and we could backtest, but I think it's probably at this point going lower. Now, how much lower? Let me roll out. You do have a potential major trend line down here. This is going back to 2016. Here's your COVID lows. There's another reaction. So we could come down and, maybe down to there. And then also you have this bearish rising wedge that we broke out of. It could backtest that again. All right. You could see a backtest of that. Somewhere right down in there would be support. So that's what I see now on that one. This is Capital One. This will be interesting. So on this one, I'm looking at a daily chart. You can see here, this is kind of going back to kind of the spike of the COVID pump. You got resistance. All right. There's another reaction here, and they're backtesting it again. It looks like they're rallying it kind of into that resistance again. So that is telling. We have negative divergence on the daily. It started to build. So you can see as the prices were ticking higher here, divergence momentum was going lower. And so that's that. The key thing though is earnings coming up on the 25th. So this week the earnings are going to report. So watch this. I'm not going to take a position in it ahead of earnings. They could pop. It could go either way. The divergence is telling me it's going to break down and get maybe gap down. But if they pop this support, if they pop this resistance and you burn through the divergence, that would be bullish and would be a buy signal. And maybe this thing is wants to run. As of now, it's at resistance with negative divergence coming into earnings. Interest rates, 10-year interest rates, TNX, gapping down this morning right to the 200-day moving average, and the buyers are stepping in. So this is trending higher, all right? Interest rates in the short, really since late December, so, all of 2024, interest rates have been moving higher. You're making higher lows and higher highs. So as you fall down to the 200, the buyers are stepping in. So I think interest rates are going to continue to rise, actually. I don't see divergence here. I see momentum moving up. I see price moving up. So it tells me that price is likely going to continue to move higher. Or not really price, because this is interest rates. The interest rates are likely going to continue to move higher. As the interest rates move higher, it's very likely going to put an end to this tech rally. If interest rates all of a sudden, stop moving up and break down, this tech rally, high probability the tech rally will continue. So the key takeaway is watch those interest rates. And then obviously you see home builders, which are interest rate sensitive, very interest rate sensitive. They're all up today on the gap down in interest rates. So these are probably going to be a sell up here. I haven't really looked, but you can see here on Pulte, negative divergence. So we're making a divergent high right now. Again, divergence isn't a sell signal. It doesn't tell me to just get out of position. Probably need to kind of find a trend line. Maybe go down to the hourly is really, and mark out some sort of a trend line or something. I don't know. It's not the cleanest chart, so I would move on from that one. But there's Toll Brothers, which is kind of a big one. You can see here on go back to the daily. Yeah, no divergence. It can go higher, put in a new divergence high. So these might have a little more to go. And I'll wrap up with semiconductors, SOXX. Obviously, NVIDIA is a key component to this index, but this does have a bearish outlook. So you've got, here's your trend line that looks pretty clean. All right, support. You're walking up that trend line there. And we are spiking up over the last couple days. Negative divergence, all right. RSI starting to turn down, it looks like, to help confirm that divergence. So again, the sell signal will come on a break of the trend line, all right. So until you see that, no sell signal, but that's what it looks like it's going to do, break that trend line. Qualcomm is another component of that, and this one obviously looks very similar. You can see here, negative divergence on the momentum indicators, spiking up over the last few days. You've got, I don't know, probably something like, I don't know, maybe that looks okay for a trend line. They did chop through it just briefly, kind of a little false breakdown, rallied up, new divergent high with negative divergence. So I'm looking for a break of that trend line for the sell signal. All right, and that would be you know, that would be the sell signal. Oh, another one that's actually kind of interesting is a firm. This is a buy now, pay later. That's been in all the news, but on this one, on the daily, one thing, negative divergence, very clean and obvious. You can see momentum just dropping. It's started diverging right in here. This is all divergent highs, all right? And then it had support, and support, gap down. Let me kind of clean that up so you guys can see. All right, held that support and then gap down the next day. So that's a sell signal. And then it has actually been making lower highs and lower lows since that sell signal. There's a sell signal. All right, there's a low, there's a high, there's a lower low. And as of right now, kind of an equal high. We'll see where it closes. All right, it looks like a sell to rip stock actually. It's up 8% today, but it could be an objective area to short. Now, the only thing that I don't like about this stock is we have earnings that are coming out next month. All right, so it's sometimes these things will just want to hold out into earnings, and which, you know, if it is going to hold out, it could kind of grind up and make a new divergent high. All right, so I'm going to give it a little room. I'm not in this one personally. I don't have a position on it. I am just kind of keeping an eye on it. Just want to point out what I see in the chart for right now. Okay, I'm going to go ahead and wrap up, guys, and I will catch you guys on the next one. Bye.